All right, welcome back, everyone. This lesson, we're going to focus on the concept of trading psychology. Here's an overview of the lesson. We'll first define and discuss what market psychology is and how the role of emotions and human psyche play a part in market movements in any general financial market. We'll also talk about trading psychology and how your emotional state can affect your trades and being aware of your emotional state and how to control that to limit its effect on your trades. We'll also talk about market volatility and how that will play a role in managing your emotions. First, let's talk about market psychology. So this is the concept that fluctuations in a financial market are reflective or are influenced by the emotional state of its participants. Now, some believe that emotions are major factors or driving forces behind the shifts in financial markets, whether that's on a micro scale, small fluctuations up or down, or just general greater trends such as greater market cycles, bear markets, bull markets. Some believe that emotions play a rather profound part of these movements. Now, I found this poem. This is by Chuang Tzu. This is entitled "The Archer's Need to Win," and even though it's about archery, I find it very much so related to trading. So when an archer is shooting for fun, he has all his skill. If he shoots for a brass buckle, he is already nervous. If he shoots for a prize of gold, he goes blind. Or he sees two targets, he's out of his mind. His skill has not changed, but the prize divides him. He cares. He thinks more of winning than of shooting, and the need to win drains him of power. Now, even just looking at this, reading through this, and internalizing it, there's so many similarities between what's going on in this story compared to when you're trading. When you're thinking of you're entering the trade, you need to win. You see the prize. You're seeing the trade go your way. And then maybe somewhere along the way you slip and you don't necessarily manage your trade. You forget to set a stop loss. You don't take profits, right? And then the trade goes against you. And this is where things start to go wrong, right? Your skill hasn't necessarily changed, but the prize divides you. It drains you of your power. Now, looking forward, entering a trade can be a hyper-emotional experience for some. It can induce stress, anxiety, and adrenaline. Doubts can begin to build, such as, did I forget something? What if I'm wrong? What if the strategy I'm following isn't good enough? These are all factors that we can consider and things that may or may not affect us on a day-to-day basis every single time we look at the charts and anticipate entering or exiting a trade. And a big factor that comes into play when we think about what's stopping us from getting the results we want. We want these higher profits. We want to make the returns on our trades. We want to make the returns on our investments. Obviously, we want to see this kind of result where we're generally moving up, but what's necessarily stopping us at this point? And a big part of that is our emotional state and how that can encumber our performance, encumber our ability to produce based on our skill. So within that, we're going to turn to trading psychology, specifically for trading. And this involves the emotional and mental state changes that a trader undergoes when trading. This can pertain to various aspects of a person's character and behavior that can influence their trading decisions. The weight of a future reward will likely cause us to perform worse in the present moment. This is where we're constantly anticipating oh, I'm going to make that 10% return. I'm going to make that 20% return. It's going to $1. It's going to keep going. It's going to keep going. And this is what causes us to perform worse, in the sense that we lose track of our skills. We lose track of our analysis and everything that has built us up to that particular point. Now, awareness of one's mental and emotional state and awareness of the effects that our emotions can have on trades is equally as important, arguably maybe even more so, than market knowledge, experience, and skill. If you have no emotional restraint and you're entering in these positions, you're most likely going to slip up at some point, and your greed or your fear will take the best of you. Now, emotionally charged behavior in trading can often fall into two categories. Either in a category of greed, where you're getting greedy and you're wanting more and more, and you're not realizing that maybe you should take profits, and you should be much more conservative with your positions and with the amount of time that you're in these positions. And then we also have the other side of this, which is moments of fear, where your fear of missing out or possible fear of losing out, fear of being stuck, fear of the trade going against you and not having the proper setups, seeing price go down and not realizing that it could be a possible buying opportunity or a possible selling opportunity. These all factor into fear. And even within fear and greed, there's a lot of different emotions that can play a part into how emotions can affect us when we're trading, right? It's not just fear. Fear could be related to nervousness, right? Getting shaky or shortness of breath, anxiety, doubting yourself when certain things are maybe not necessarily going your way. And this can all cause us to fail to fall back on our plan, right? When we entering a trade, we want to have a set plan, and fear and even greed can affect us, where we lose sight of what got us there in the first place. So feelings such as overconfidence, FOMO, fear of missing out, and just general anxiety associated with greed as well can all affect you. And really all of these emotions can play a role when trading, and having awareness and the ability to separate yourself emotionally from your positions, from your assets, from your account, really often is what makes or breaks a trader in the long run.